I will share that it's a weakly held view, which is it's clear that the markets don't always run in a correlated way. We had a step function increase in ETH. So if you look back, it's hard to say that the buying pressure didn't influence the price of ETH, but it's also probably clear that there are sellers in the market that are countering today's demand. And so I think it's some element of we're still educating the market. There's some element that there's still liquidity to absorb this buying pressure. And it's probably certainly true that there are sellers out in the market that are balancing this as well. People taking profits, given that the price of ETH has nearly doubled in the last 2.5 months. So I think it's a combination of all of the above. I think we'll only know for certain when we look back over time.
Joseph Chalom, BlackRock's head of strategic ecosystem partnerships, emphasizes tokenization as a key bridge between traditional finance and digital assets. His view aligns with Ethereum's growing role as a foundation for tokenized products, currently trading at $4,464 with a daily volume of $22.9 billion. Chalom reflects that tokenization, despite the hype in 2017 and 2018, failed to advance then because liquidity, utility, and ecosystem support were lacking. Most projects remained experiments rather than true innovation. BlackRock addressed this gap by partnering with Securitize to tokenize a short-term treasury fund on Ethereum. The model created a native on-chain bridge between stablecoins and yield-bearing assets, offering investors seamless access to both liquidity and returns. Its success came not from brand recognition but from delivering real utility. Chalom sees this as evidence that tokenization can unify finance, eventually erasing the divide between crypto and traditional markets. In such a future, investors will manage both crypto assets and tokenized instruments like stocks or bonds within the same wallet. This vision reflects broader global trends. A comparative study of the US, EU, UK, Switzerland, Australia, Japan, and South Korea shows regulators steadily building frameworks to support tokenization while addressing risks. Meanwhile, China demonstrates state-led adoption by launching a central bank digital currency, tokenizing bonds, and testing a cross-border currency bridge. This is only the first step in understanding Ethereum's journey. Stick around, the next part is where things really get interesting. So stay tuned and don't forget to hit like and subscribe so you don't miss what's next.
I think if you take a step back, I remember people talking about 2017, 2018 being the years of tokenization. And it turned out they weren't. And there was a reason why. Tokenization has incredible promise. A digital version of ownership that is programmable, that can be borderless, that is instantly settlable through trust on a network like Ethereum. But there needs to be an ecosystem around it that is ready, and there needs to be a purpose. Meaning, if there's not liquidity, if there's not people who can trade, if there's not utility, then it's really just experimentation and press releases and proof of concepts. And I've said this before, if you are not putting a product in the hands of a customer, that is experimentation. Once it's providing utility, that is innovation. So I think there was an element of the market that demanded yield. If you're holding stable coins on chain, you need that liquidity 24/7 to transact in crypto on crypto rails. But there was a trade-off. You were giving up the yield. And at that point, it was 4.5%. That's a significant trade-off to be on chain. And so there was a view at BlackRock that we could solve this problem by tokenizing a short-term treasury fund, but not doing it in a way that only provided access, 9:30 to 4 p.m. through a mutual fund wrapper, not in a way that made you wait till Monday if you redeemed on Friday. So the idea of tokenizing, and we partnered with an amazing firm, Securitize, through an investment from BlackRock, tokenizing on public Ethereum that in a manner that token was interchangeable as a stable value with a stable coin, so that when you need to be in stablecoin, earn no yield, transact on chain, great. At 3 a.m. on a Saturday, if you wanted to get yield bearing, you can easily transfer into the BlackRock BITL token. That was an unlock, and it over time, grew to $2.5 to $3 billion fund, not because BlackRock's name was on it. It was because it was providing utility to the holder. and it was native on chain. And if you take a step back, I talk a lot about the mission of bridging traditional finance with crypto, but also bridging crypto with traditional finance. If you think about our conversation, there's a bit of a paradox. We're, wrapping a crypto native asset like ETH or Bitcoin in a traditional wrapper of an exchange traded product is a bridge. Wrapping yield, really boring fund, in a traditional crypto wrapper is another bridge. And I think what we're going to see is that tokenization is going to be the macro trend that will collapse this all into almost a single ecosystem. So there's less of a distinction of the 4 trillion of crypto market cap and the $100 trillion of traditional market cap. It's all going to exist in digital format, and it'll be in wallets. Traditional investors are going to have crypto in their funds, and crypto investors are going to have access to the S&P 500 in that same wallet in tokenized form. So it's paradoxical how this is coming together. But if you take a step back, it is about bridging worlds and basically incredible utility that's going to inure to investors and holders of these assets by running it on chains like Ethereum that provide neutral trust. And we can talk about this a little bit more. I think people are missing that story, that these ecosystems are going to converge, and it's going to be a digitization and decentralization.
Joseph Chalom emphasizes that Ethereum's value story is not about short-term market swings but about long-term fundamentals. Drawing on a consensus report, he highlights a strong link between Ethereum's market capitalization and the high-quality liquid assets secured on its blockchain, stablecoins, tokenized real-world assets, and DeFi lending or borrowing. Historically, every $2 of such assets has translated into roughly $1 in ETH market cap appreciation. With stablecoins projected to scale toward $2 trillion, tokenized assets moving into the trillions, and DeFi adoption forecasted at $4 to $16 trillion, Ethereum appears primed for sustained value creation. What makes Ethereum even more compelling is its programmability. Protocol upgrades like ERC 8004 are paving the way for AI agents to execute transactions with built-in identity and reputation checks, potentially reshaping workflows in both finance and daily life. This evolution could accelerate money velocity and enhance Ethereum's utility beyond investment narratives. Institutional adoption further validates this thesis. Corporate treasuries now hold over 4.1 million ETH, valued at $17.6 billion, signaling Ethereum's transition from a speculative digital token into a reserve-grade, utility-driven asset. For investors seeking exposure to the digital economy's backbone, Ethereum is increasingly emerging as a cornerstone of the future financial system. Let's get back to the interview.
Sure. So rather than start with a view of what the price of Ether will be, what I'd love to do is maybe give you a fundamental framework to think about how the value of Ether can change over time. And what I want to do is, refer to an amazing consensus report. You can almost call it the industrialization of Ethereum or the trustware report. And I would encourage everyone to read it. And there's a bit of a framework that if you look back over the last 5 years, there's a high correlation between the value of Ether, the token that's securing Ethereum, and the value of the underlying assets, high quality liquid assets that are secured on Ethereum. And what do I mean by high quality liquid assets? I mean 3 categories. Stablecoins, where Ethereum has the majority of all stablecoins issued and running on its chains, is number one. Second is tokenization of real world assets. And the third is the slice of DeFi that is real world activity. I mean, borrowing, lending, and exchanging of capital. So high quality TVL. If you take a step back and look at how that has grown over the last 5 years, there's almost an uninterrupted view that for every $2 of high quality liquid assets secured on Ethereum, there's about $1 of appreciation in the market cap of ETH. And I'm not suggesting that as it goes J-curved, that correlation will continue to be linear, but I'm suggesting there's a correlation. So if that's your framework, then you could look at each of these pools of assets, stablecoins, 275 billion going to potentially 2 trillion over the next few years. Tokenized real world assets going from 25, 30 billion to some much larger multiple, potentially measured in the trillions. And then if you look at the institutionalization and adoption of liquidity on DeFi, and I'm talking again, lending, borrowing, and exchange of value, those three things, if you look at what some of the experts are saying at Boston Consulting Group, that over the next several years will get to $4 to $16 trillion. So if you take a step back, just think about, you asked for simplicity, a simpler rubric that if these high quality assets are secured by Ethereum and the L2s that derive security from it, you can put your inputs in and it'll give you an output. And in any forecast, that output of what the price of Ether is going to be is significantly higher than it is today. So if you believe there's a long-term trend of tokenization, if you believe that it's going to happen on the most secure, trusted, and liquid chain, Ethereum and the L2s, then you have a thesis that the price of Ether will be going up significantly. Now is the time to take advantage of that macro trend and accumulate as many stacks of Ether as you can at the current values, before you even talk about businesses and things you can do with ETH. The second way to answer your question of like why ETH and why it's the highest, powered money, I would answer it in two ways. Ethereum as a network is not like the Bitcoin network. It is highly programmable with apps that are coming. And so far, we've only spoke about real world assets and tokenization and the like. But if people take a look at the recent protocol development on Ethereum around ERC 8004, we are talking about an ability to use AI agents to transact across domains with registries that understand identity, reputation, and validation. And I don't want to go into the hype of AI and what it could be. All I'm suggesting is the thesis that I've just laid out doesn't even include a world where AI agents are going to be a very large part of the workflows that happen in traditional finance, that happen in our personal lives. And when you think about the velocity of money, it's going to be agents who help do a lot of that. So I think there's a long-term promise. That was a super long answer to a very short question. This is why I'm really excited about, as I said before, a decades-long trend.
Ethereum's strength lies beyond short-term price moves. It is becoming the backbone of tokenization and digital finance. By securing stablecoins, real-world assets, and DeFi, ETH's value is tied directly to the growth of high-quality assets. Its programmability and emerging use cases, from AI-driven transactions to identity-based systems, further expand its utility. With billions in ETH now held by corporate treasuries, Ethereum is shifting from speculation to a reserve asset. As regulation advances and traditional markets merge with blockchain, Ethereum is positioning itself as a structural pillar of the global financial system. For investors, the opportunity is not just cyclical. It's the foundation of a decades-long transformation in how value is created and exchanged. As tokenization scales into the trillions and Ethereum cements itself as the backbone of digital finance, do you see ETH evolving into the world's first truly programmable reserve asset? From Bitcoin's digital gold to Ethereum's programmable future, we are witnessing the dawn of a new financial era. The only question is, are you ready to be part of it? Share your thoughts in the comments, subscribe for more insights, and join us on this journey into the future of digital assets.